Turkey's central bank cut its one-week repo rate by 25 basis points today as inflation slows and it faces growing political pressure to ease monetary policy. Sevin Ekinci from Ekinci Economics in Istanbul is on the line. Sevin, do you agree with the central bank's cutting strategy? Will it show positive results?
Actually, it did not cut only the policy rate, it also cut the upper bound of the interest rate corridor and the lower bound of the interest corridor as well. The upper bound of the interest rate corridor is lowered by 50 basis points from 11.25% to 10.75%. And the lower bound, it has been lowered by 25 basis points to 7.25. And the midpoint, we cannot say midpoint of this interest rate corridor, but let's call it mid for the time being. The mid one, which is the 1 week repo policy rate, is lowered by 25 basis points. It's now at 7.50. Actually, this was within our expectations, mainly because of the political pressure. You are right about it. However, it is not only about the political pressure. The inflation figures will help this. Let me tell you about the base effect. There is a very positive base effect on the inflation side on February, March, and April. This will bring down the annual inflation figures below 7%. But maybe we should have waited for the figures to be announced. They did it before the announcements. Maybe this was why we can say there was some political pressure. But I should tell you that these figures, the cut in the interest rates, were not very high. You can see the reflection in the FX market, in the foreign exchange market, for example. The reactions in the foreign exchange market were not quite high. We were maybe expecting US dollar Turkish lira parity towards 250, but this did not happen. I should tell you that the US dollar Turkish lira parity is now around 247 and 247.40, let's say. But before the announcement, it was only 247.80. So there was not big reaction. This was within market expectations.
The lira weakened the most in 2 weeks ahead of the meeting. How is it trading now, and how do you expect it to be trading by the end of this week?
The highest depreciation happened between the 21st of January and 30th of January. There was a 5% depreciation in just 10 days. And the uncertainty brings this, actually. When the market conditions are more certain, we do not see this high volatility. This uncertainty happened because there was an unfortunate statement by the government başçı in the inflation report meeting. He said that they can convene extraordinarily. They can make an interim meeting just to lower the interest rates on February 4th. So this brought some uncertainty. On the other side, there was some pressure from President Erdogan, and this big depreciation happened because of this uncertain environment. But I'm not expecting a depreciation in Turkish lira against dollar to be higher in the weeks ahead because, there's more certain environment. The only thing that will affect the Turkish lira will come from the global area, from Fed statements, for example, or from the United States Central Bank Fed head Yellen testimony to the Congress. If we hear some hawkish comments from her, or if we see some unease on any increasing tension between Greece and the European Union, for example, this will weaken further the Turkish lira. But from the monetary policy side, the picture is more certain now because we will see lower inflation. And this will support the Central Bank of Turkey policy, at least for a while, for 1 or 2 months, right? At least until June, we will have more certain monetary policy conditions. But after June, things will be more cloudy.
Sevin, a pleasure having you on the show today. Thank you very much. Viewers, stay tuned. We have plenty more heading your way. Bye for now.